Yes.
Time for thinkingrealestate.com. Laura Dwyer-Sleipke.
And some guests.
Special guests today.
Special guests. I have Monarch Community Bank here, so if you have any questions, you're going to want to call 787-3397.
Certainly.
I have to tell you a little story.
Oh, good.
I was at the gas station yesterday, the one on the corner of Ganson and Northwest Avenue. They're not getting much business, so people need to go there because the road construction, you can get to it. Anyhow, so I'm getting gas, and a gentleman came up to me and talking about my car, and he knew the Dunnigans who were doing the constructions there and said he went to school with them. So I said, well, I'm a Dwyer, because there's a lot of Dwyers out there. And he said, do you know Laura Dwyer-Sleipke? So I said, well, that's me. So I'm going to do a shout out to John Wheeler. He's a listener.
Welcome, John. Thanks for listening.
Hey, John, it was great meeting you. So anyhow, that's my shout out for the day. That's my little story.
There you go.
Isn't that fun?
Intriguing.
But anyhow, so we have Kieran Brown and Ryan Maloney, who are loan mortgage officers for Monarch Community Bank. And I thought it'd be good to have them on because I hear interest rates are really low right now.
Extremely low right now. One of the things we looked at before we came in was a 15-year fixed conventional interest rate on a conventional mortgage with a loan of $150,000 and an 80% loan to value. That means you have your 20% into the property already. You're looking at 2.75 with an annual percentage rate of 2.8252. You can use that to measure the cost of this loan versus others. And on a 30-year conventional mortgage, you're looking at 3.5% with an annual percentage rate of 3.535. These rates are lower than we have ever seen them before. If you've seen them lower than this, give me a call because I want to know where and when.
So
that's what, 20% down?
That's 20% down. Most people might have, some money into the home already, to where.
So you're talking if they refinance it.
Well, that's if they refinance or purchase. If you have that 20% down, you can get a rate that low. You can even get that rate low without that much money down. There's a number of different programs. Then the APR, the annual percentage rate, is going to change a little bit for you because you'll be wrapping in maybe a little bit more cost. But these rates are historically low, never been this low before, and now's the time to get out and buy if you're looking for a house.
Yeah, I meant to grab my mortgage calculator because I knew you were going to tell me they were this low, and I wanted people to understand what that meant on a monthly payment because I don't think it's kind of hard sometimes to comprehend that.
Yes.
To give you an idea of that, I was actually working on a loan before I came in here, and this was a loan, nice house on Gillett's Lake, $193,000 mortgage. Now this is going to include his taxes, insurance, and everything. His payment on a $193,000 house with taxes, insurance, principal, and interest included is only going to be $1,100.
You're kidding. Now I assume that's his primary residence.
That's his primary residence.
Wow.
And he'll only be at about 90% loan to value. So again, these numbers are going to change based on your specific circumstances, but these rates are going to give you the lowest payment you could possibly ever get on buying a house right now.
Unbelievable. So if you have questions, call 787-3397. So my question is, what does it take me to get what's it take to get a mortgage? What's my minimum credit score you're going to look for, and then what other requirements are you going to need?
Now, there are programs with lower credit scores than what I'm about to say, but right now, to make sure that you're going to be able to get into a home, you want to have at least a minimum score of 640, okay?
Mm-hmm.
And that's on a Tri-Merge Credit Bureau, so it's best that you call your lending professional, have them take a look at your credit score using a Tri-Merge credit score for mortgages. Now, that 640 score is going to get you into an FHA loan or a USDA Rural Development loan. For the conventional mortgage products, you typically want to use, if you're going to use that product, you're going to want about 5% down and a score of 680 or above.
For conventional.
For conventional. But again, we can get you into a house with a 640 credit score using FHA or USDA Rural Development, which is a very popular program in our area.
Now, I check my credit every month with a service that I pay for. That credit score is going to be different than a tri-merger, correct?
Yes, that score will be different usually than the tri-merge mortgage credit model that we look at. It's best to get with your lending professional. Go get that credit score, talk to them about your credit. One of the biggest problems people are having when they apply for a mortgage is sometimes there might be something on that credit report that they could fix very easily and quickly, and they don't do that, and then it starts sometimes even an avalanche of paperwork. So work with your lending professional, go over that credit report, make sure that everything's where it needs to be and that score is proper, and do any repairs you need to do to the credit before you apply for the mortgage.
Could you give us an example of that?
Something might be where you have a credit card that you just bought, say you needed your dishwasher broke and you had to go out and buy a dishwasher. Now that credit card has a higher balance than you would normally keep. That's going to show possibly a lower score than you would normally have. So if you normally keep that credit card at a low balance, get that card paid down and then apply for your mortgage, because that's where you're going to get the rate that you really deserve and the credit score that you really deserve.
What kind of challenges are you seeing? Like, I just saw Tom Hardwick today of Tom Hardwick Appraisal.
Appraisals, yeah.
And he had just done an appraisal for one of the properties that I sold for one of the lenders. And it came in, but that was on Lake Columbia, sale price of $390,
Yeah.
includes concessions.
The appraisal's always that iffy mark right now because it depends on the homes that have sold recently. The other things that we see that become a problem is when somebody's looking to purchase a home, is their funds, or sourcing their funds, the money they have for down payment and paying for the appraisal, the inspections. It's best that you make sure that money has been saved up and put into one bank account that you're going to use the whole time through your transaction. When the underwriters or the lenders, they see that you're using money from multiple bank accounts, they're going to ask for a lot more documentation. So the rule of thumb is make sure where your credit score is. Make sure you're purchasing a home that can appraise for the value you're purchasing it at. Then with your funds, your down payment funds, and any money you're going to be using to purchase the transaction, make sure you get that into one bank account up front and that you can source where that money came from.
So I can't use that cash I have in my pillowcase?
No, the cash in the pillowcase isn't going to work well.
There's a lot of people who have cash in their pillowcases. Or,
Where?
I'm not telling you. I'm not telling you.
We'll be right over.
You'll help them change their pillowcase?
Well, obviously you would take the cash out of your pillowcase and
But
put
you
it into
have-
that one account that Brandon talked about.
Yeah, but IRS rules, if you put, what is it, $8,000 or $7,000 into an account,
There's a certain amount of money. I do believe it's about $8,000
yeah,
now.
you have to tell them where it came from.
Where it came from.
Well, it came from your pillowcase.
Right, yeah, I'm not sure that that's an acceptable definition on the IRS.
Sometimes in those cases where
You guys make it so difficult.
I'm telling you. We want to know you really want that house.
Exactly. It's not us, trust us. It's the underwriters, the overseers of the lending industry right now. But with that situation, that money in the pillowcase, start working that into your bank account as you start looking for a home. It's nice if you can find a home in one day, and I'm sure Laura could help you find that house in one day.
That's right. Way to segue into that. I appreciate that. Teamwork.
But overall, you're going to be going through a process as you start your mortgage application and you find that house. And that could be anywhere from a month to 2 months to 3 months. Start putting some of that money in the bank account week after week. And then once you find that house, make the application knowing you have enough money in the bank for the purchase of that home.
What other type of things? You want employment for X period of time?
That's the next thing that stops a lot of people from getting a house. A change of a job or not on the job a long enough time. Overall, in a mortgage application, we're going to go over the last 2-year history. The 2-year history of where you've lived, the 2-year history of where you've worked, and the 2-year history of how much money you've earned. Now again, everybody's situation is a little bit different, but make sure that when you go to make a mortgage application, you have that information available. It'll just help your lending professional get through the process very quickly for you and help let you know exactly what you need to do to get approved for that mortgage.
And I assume there's no, what were those mortgage? I could tell you how much I earned and I didn't have to document it. Those loans don't exist anymore.
No
do
more
they?
Ninas or Ninos or no incomes.
No income verification, is that what it was?
Stated income documents.
Dang.
So
Yeah.
you just, if you don't work but have a lot of money, you're not going to get a mortgage?
No, that's not necessarily the case. If
Okay.
you don't work and you have a lot of money, there are certain programs that can work for somebody with a high enough net value where we're going to look at how much they have in money, and those are a much different type of a loan. So if you have that situation, give us a call. We'll work with you on that. But for most people, what we want to be able to do is prove that income, whether it's through working, Social Security, or some other type of government fund, that subsidy fund or fund that comes to you. Let us know where that money comes from, and we'll work to help make sure that you can prove this to the underwriters and get your mortgage approved and closed.
Would
No.
gambling work?
I
Believe
don't
it or
know.
not, gambling funds are acceptable income funds if you can show the history of those coming.
Okay.
Now, it's not common that somebody can do that, but
Right.
a lot of times I did have a loan once where a lottery winner stopped working, but they had the lottery funds that they were receiving an annuity payment. Now, that's income that they're going to receive for at least
Sure.
the next 3 years and in the future. So that, in that case, that would work.
Mhm.
Win the lottery, and you're all set.
Yeah,
Wouldn't you pay if you won the lottery? Wouldn't you pay cash?
maybe.
I mean,
not.
at 2.75, maybe not, but at 6% interest, or my first mortgage was 16% interest
Yeah.
back in the day.
I was
84.
14.7.
Yeah, I tell people that, and most people don't realize that it was even higher than that at some point.
Yep, I remember my mother being happy to get out of her mortgage at 20-some% when we were kids.
Yeah,
Incredible at
unbelievable.
where it's come.
We had challenges in the 80s, challenges in the 90s, and we still have challenges today. So that's why we earn our money, right? Make us earn it. So we have another guy here too, Ryan Maloney. We don't want you to be excluded here, Ryan.
Thank you, appreciate it.
So you said you got in the business in 06. What have you seen different?
Well, obviously 06 was right before everything really got bad, and then we had a couple rough years, and just actually seeing people encouraged about the future right now has been one of the biggest differences. Talking to people like yourself in the industry, talking to just, everyday people on the streets, and actually people looking forward to what's coming next. Looking to buy a house again, looking to refinance, just some positivity has been one of the big things.
Well, in 2005 is kind of when they started actually foreclosing on people. Don't you think towards the end of 05? Maybe more so in 06?
Definitely in 06.
Yeah,
yeah,
06.
definitely in 06.
So are those people who were foreclosed on in 06, they're now qualifying for mortgages?
In some instances, obviously it's case by case, and it depends on what they've done in the ensuing years. But yeah, I mean that's something that it's worth having a conversation about.
Mm-hmm.
Obviously we have to look at each individual as they come in and what their specific situation is. But now might be a good time to start looking again.
If I was foreclosed on in 06, how many years do I have to wait before I can qualify for a mortgage?
For an FHA mortgage, with a foreclosure in the past, you want to wait at least 3 years.
Okay, so I'm really clear then.
You're very clear at that point.
Okay.
For a conventional mortgage, provided you've done enough rebuilding of credit history, you'll need to wait 5 years. So you're okay even with a conventional mortgage if you
Okay.
foreclose on it.
What about a short sale? Now, short sales didn't exist in 06. If they did, they were few and far between.
But more and more of those short sales happened in 2008, 2009, and 2010. With 2 years after your short sale, you can qualify for an FHA mortgage, provided there were no late payments before that home short sold.
Well, the likelihood of that is pretty rare because most banks won't even look at it unless you're late. Unless you're a local lender. I mean, I have my local lenders that will work with clients.
But again, it's something where if leading up to the point where the short sale was decided on, and then the payments started being late, it's something that on a case-by-case basis we'll start looking at it.
Okay.
Just so long as that sheriff sale didn't happen and that you were working with the bank on the short sale, we're going to be able to use an FHA loan 2 years after the short sale, definitely 3 years after the short sale.
Okay.
So you'll have to give a call so we can take a look and make a judgment based on what happened during your short sale period.
What about bankruptcy?
Bankruptcy with FHA, we're 2 years or more out. With conventional, we're back to 5 years or more. So the other program that fits in along with FHA is the USDA RD loan. Very similar guidelines
Right.
to FHA.
So the government will give you money with a less than stellar background, but conventional where the bank is more than likely going to hold it, or you're selling it to some
Freddie Mac
investor?
and Fannie Mae. When we're doing a conventional loan, they're typically being sold to Fannie Mae or Freddie Mac. I'm sure we've all heard of those agencies recently. But those loans are going to require that 5-year period of time typically for short sale, bankruptcy, any past credit problems. FHA and USDA Rural Development are loans that are going to take that paper a little bit sooner because of their guaranteed nature. You're paying an upfront mortgage insurance premium with an FHA loan, and it's that mortgage insurance that lets the investor feel comfortable that your loan's going to be covered no matter what happens.
So I don't have PMI with Fannie or Freddie?
Depending on your down payment, that 20% down payment, so long as you're under 80% loan to value in the purchase home, you
Okay.
won't have a PMI payment. However, PMI is much lower now with a conventional loan than it is with the FHA loan. So
Okay.
a number of people are looking at a conventional loan with 5% or 10% down than they are at an FHA loan. Right?
I think I had a client who was going to pay an upfront premium and then it would eliminate the PMI. However, their interest rate was going to be higher because that was the upfront premium.
That's the one thing the banks are always going to make sure they do. They're going to get their money one way or another.
Right, exactly. And I
But-
would think if you're going to, most people I think are staying in their homes longer now. So I would think you're almost better off paying the PMI than you are paying that higher interest rate.
You know, considering our situation with the low home values right now, if you pay the PMI, you're going to be able to pay your principal down below 80% in about 7 to 8 years, and then you'll have 22 years on a 30-year mortgage that does not have that MI payment.
Right.
So it is typically better that you pay that because you can always petition to have that MI removed if your home value jumps or spikes dramatically.
Correct. All right. Interesting. What am I missing? So I come in for a loan with you guys. What do I need to know about you?
Well, first of all, we're over on Lawrence Avenue, so
Oh,
to
there
find
you
us,
go.
we're on 1035 Lawrence by Carmes Flowers. I guess the big thing with us is we have the word community right in our name. We're part of the community. We want to be with our customers the whole step of the way, just like you do, with your clients. So really answering the questions. I mean, obviously, there's been a lot of stuff thrown out here today that gets kind of technical. So there might be follow-up questions. We're there to answer those and to be right with you through the whole journey to get your mortgage approved.
How have you found this market?
We found a lot, like I said before, there's a lot of positive feelings right now and a lot of enthusiasm. And that's really, really, really neat because it wasn't that way not too long ago. So the market's improving. People are looking to buy, trying to get enough houses on the market, I think.
Oh yeah, we have a shortage of homes.
To
People
meet that demand.
call us so we can list them,
Yeah.
and then Monarch will put the financing in place. All right. Well, this was Kieran Brown and Ryan Maloney of Monarch Community Bank, and you can call them. What number do you want them to call you guys?
1-800-882-2911.
And they are in Jackson, so don't
Correct.
be
We are right here in Jackson.
confused. Don't be confused
Lawrence
by that
Avenue,
800
next
number.
to Carmes Flowers. The 800 number is just a service. Rather than having two separate numbers, we went to one number. You call us on that 800 number, you'll get a hold of Ryan or I, and we'll make sure that we answer all the questions we need to help.
So 800-882-2911, and they do commercial loans, I'm told also.
Correct. Yep. We have someone that can help with that, and that's just something. Give us a call, and we'll get you in front of the right people.
Okay, or you can call me at 780-3800, and I'll get you their information. Hey, I've got a new listing, Greg,
Yeah.
at 416 Adams. It's not a fancy house, but it is move-in ready. It's nice, nicely newer carpet, paint, 2 bedrooms, 1 bath, just under 900 square feet. Nice, clean, dry basement, 24/9.
Wow.
It's a cute house. It's got a nice big shed with an overhead door. We have price reductions at 8838 Coon Hill Road, which is Stockbridge Schools, $59.9. 4620 Clark Lake Road, which is Napoleon Schools. That house has got a park-like backyard. That is a very cool house at $147,000. And then a Western School District at 8036 Sharon is down to $68,000. And 1101 Pringle, which is right there in the city, $24,900. We have open houses this weekend, 1 to 2:30. Both of them at 4620 Clark Lake Road, the one I just told you with the Park Lake backyard. And then 5489 Benton Road. That house is a lot bigger than it looks, with a great fenced-in backyard. So come look at those houses, 1 to 2:30 on Sunday.
And find out more.
Call 780-3800. Go to thinkingrealestate.com.